Let's record. Perfect. So look, this is a topic that to me it's incredibly important because the truth is there's there's a lot of people that don't fit in the conventional financing loans. And look, we all know why mortgages have are the way they are right now, right? They definitely are, there was a big change after the crash where mortgages became a lot harder to get. Everything was uh, elevated as far as like all the conditions and all the qualifications for the clients, which was a good thing for the environment and the economy and all of that. However, there's a lot of people that because they don't fit in the traditional financing ways, in your typical conventional FHA regular loans, they are basically not able to maximize their purchase potential and they're not able to get a proper loan. So there are other avenues for those people, like a lot of different type of financing that we have available to your clients and to you, that it's important for you to at least know that they exist. And the reason I tell you this is because how many deals have you said no to, or how many people have you talked to that say, oh, I just don't show enough income in my taxes, or how many deals that you were selling or that you were in the listing side that fell apart, that didn't necessarily have to fall apart, because there are other options for clients. And that's what we're going to talk about. We're going to talk about all of these things. I understand that you guys as realtors don't need to be lenders and don't need to know all the ins and outs of these programs. However, it's important for you to know that they exist and there might be a way forward for all of these clients. The other thing too is a lot of clients have given up on the idea of buying a house. A lot of people have given up on the idea that with their situation, they're going to be able to purchase a house. And that's not necessarily the case. So while I go through all of these things today, I want you guys to be thinking through, okay, great. What kind of client, or what client do I have? What person do I know in my circle that I can talk to them and tell them, hey, look, I know that you haven't, or I know that you've tried to get a conventional loan or a normal loan, but this is a whole other possibility for you. So I'm going to share my screen. I need somebody, please, in the chat to tell me that you can see my screen. And let's get ready to go. Okay, let's see. All right, can I get somebody in the chat to tell me we can see the screen? Beautiful. Thank you, Claudia. Perfect. Okay, excellent. So no buyer left behind is about thinking outside the box. And look, we have a lot of programs within the normal programs, between your conventional and FHA loans and things like that. There's a lot of things that we can already do that are outside the box. Things like if somebody doesn't necessarily have a lot of income, we can create some distributions and we can use their investment assets and turn them into income, things like that. But we're going to go beyond that in this class. So let's start this. If you guys have any questions, please, 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 please drop them in the chat and we'll make sure to address them as we go. Okay, perfect. Okay, so in traditional financing, there's a lot of buyers that right now are getting the short end of your stick. Think about your self-employed and small business owners, people that haven't had 2 years of self-employment, people that are new to the state of Florida or recently retired that were making a lot of money last year, but don't have that income anymore this year. People that are transitioning. Think about people that are getting divorced or that are downsizing. A lot of real estate investors, they don't necessarily fit into the traditional financing, and a lot of seasonal and gig workers. All of these are people that we know that they make good money. They have a lot of times money to put as a down payment, but they don't fit because the income qualifications are not what your typical conventional and FHA and VA loans require. So traditional financing today, it's a little bit too strict for a lot of people. Taxable income instead of actual income. A lot of times, and look, whether it's fair or not, we have people that make good money, that we know make good money because we can see it in the bank statements. We can see that they have enough money to put as down payment, but because they don't show it properly in their taxes, guess what? They don't qualify for a normal loan. People that don't have 2 years of self-employment. Yes, a lot of there's been a lot of advancements, if you will, on this rule where now technically conventional loans are not required to have 2 years. One, they're definitely not required if they have 5 years of self-employment. So if somebody's been self-employed for 5 years, then on a conventional loan, you only need 1 year tax return. And they made some changes that allows for at least the possibility of somebody that's not been self-employed for 5 years to not require the 2 years of tax returns. But when you actually go deep into the guidelines, it's in very, very few cases that we can use that exception. So basically, a lot of lenders require the 2 years of tax return if they're self-employed. That doesn't work for a lot of people. There's not a lot of options for short-term financing. Think about all your people that want to do fix and flip, or I know of a lot of clients that they are selling their house and they're going to buy or they're going to buy with the proceeds of that sale, equal house, a similar price house, or even a cheaper house, and they don't necessarily want to get a long-term loan, right? All they want to do is they want to get a very, very short-term loan to secure that purchase while they sell the house that they're selling. In traditional financing, that's not allowed because we want you to, if you get a conventional loan or a normal loan, to keep that mortgage for at least 7 months to a year in some cases. And then the condos. Let me tell you, condominiums here are getting harder and harder to finance because of things like the hurricane and the insurance deductibles and things like them needing to have enough reserves. And while we do a very good job in conventional financing, trying to make sure that we can use or we can turn that condo into a warrantable condo, a lot of times it's just not possible, right? If you have, for example, a condo that has an insurance where they have a 10% deductible, that doesn't fit for Fannie and Freddie Mac guidelines. So that condo is immediately non-warrantable. These are things that you guys need to know, especially if you're the listing agent. If you're a listing agent on a condo, you need to have an idea if this condo, what kind of financing this condo can have, because that's going to save you a lot of aggravations, and that's going to help you not only market it properly, but also accept the right kinds of offers. So, and then if you're a foreign national or if you have an ITIN number, it's very hard for you to get financing. It's impossible for you to get traditional financing. So all of these clients and many more are left behind when it comes to buying a house. And that's a problem because look, the reality is a lot of times these are clients that are very, very well qualified. Okay, these are clients that are very, very well qualified, but we have you covered. We have the right loans for you. First of all, I want to address a couple of things before I start showing you the different programs and the different solutions that we have for this. Because oftentimes when we talk about this, a lot of people just go, oh, here we go again. This is going to be a problem again. This is going to be like a 2006 again. And look, that's not the case, right? Because like I was saying, when you look at this list, a lot of these clients are even more qualified, even better qualified to actually own a home than a lot of the people that technically qualify on traditional financing. These are people that in real life make money. These are people that we still need to look at their credit and we still require it for them to put a down payment. This is not like it was before where we were just giving loans to everybody. You can fog up the mirror and you get a loan. It's not at all like that. The other thing is all of these loans are going to be backed by banks. This is not hard money lending from a couple of investors that are stringing together some money. This is actually backed by banks, our bank and other banks that specialize in this type of non-traditional financing. Like I said, they're very well qualified. These are clients that make money or at least have assets or enough assets and reserves to be able to buy this type of properties. Another thing is the closings are fast because a lot of times what we're doing is we're not requiring certain documentation that take time. For example, taxes. We need tax returns normally, and we need tax transcripts, and we need 2 years, and we need to verify them. So once you remove all of that, it makes for a much faster process, and they're consumer friendly. Consumer friendly meaning in a lot of these loans, there's not going to be things like prepayment penalties. It's impossible for them to have negative amortization. All those things that got us in trouble back then are removed from these loans. So it's not predatory lending. It's not a bad deal for the clients. It's actually a viable option for these clients that couldn't otherwise get a house to be able to get into a house. And I like to say that it's a common sense approach, right? If I have somebody that can put, I don't know, 40% down payment, 25% down payment, and after the closing, they still have enough money in the bank to be able to pay for that loan for 2 years, why wouldn't we give them a loan? I would argue that that's a lot better than a lot of the loans that traditionally we can do. So it's more of a common sense approach with these loans. So let's start with the first problem that we can tackle. No assets, no problem. Somebody that doesn't have a down payment. So now, little caveat here. This is not the Hometown Hero loans, okay? At the end of this presentation, we're going to give a quick update on the Hometown Hero because the Hometown Hero is going to be back on July 1st. It's worth mentioning. It's a great way for you to promote to your first-time home buyers. However, this is not the Hometown Hero loan, and the reason why I want to make that specification is because this loan, it's always funded. The problem with the Hometown Hero loan is that it's a loan that comes and goes as the funding comes and goes. So we had it for a while, then we stopped having it, then we had it again, and now we stopped having it, and now it's supposed to come back on July 1st. This one that I'm going to show you, it's funded all the time. So it's not something that you have to worry about whether or not there's money at the moment or money at the time of them getting under contract. And this is important because for all of your people that were planning on getting the Hometown Hero, that A, couldn't qualify for the Hometown Hero, or B, qualify for the Hometown Hero, but didn't find a home until after the funds were gone, this is the program for them. So this is a down payment assistance program. No first-time home buyer requirement. So the client does not have to be a first-time home buyer to qualify for this program, which is very different than the Hometown Hero. We can give them a 3.5% or a 5% down payment assistance, and you get two options. You get a repayable down payment assistance and a forgivable down payment assistance. Forgivable meaning one, after 5 years go by, they don't have to repay that money. It's completely forgivable. That repayable, as the word says, they need to make payments on that second loan and they need to pay it off within 10 years. Now, the beauty with this is as long as they have good credit, they can pick between the two. This is for primary residence only. So again, this is for the house that you're going to go in and sleep every single night. This is not for a vacation home. This is not for an investment property. So before a lot of people start asking that, make sure they understand down payment assistance is only for primary residences. But that doesn't mean that you need to be a first-time home buyer. This is forgivable after 5 years, like I said, or repayable in 10 years with a rate of 8.99%. Again, the forgivable has a 0% rate and the repayable has an 8.99% rate. The 8.99% rate is just on the second loan, not on the main mortgage. We're talking about if somebody wants to get, just to use simple math, buy a $100,000 property, they will get a normal loan that whatever the rate is, let's call it 7%, and then the 5% of the down payment, those $5,000 would be at an 8.99 rate. Again, not the main loan is at that rate, it's the second smaller loan that we're using for the down payment. What I like about this loan is that we can combine this with an FHA loan. Now, those of you know that FHA requires a 3.5% down payment. So if a client gets a 5% down payment assistance program, we can use 3.5% for the down payment and 1.5% for the closing cost. Super important, because in addition to that, you can still ask for your closing cost assistance from the seller. So most of the clients that go through this program end up basically paying nothing at closing or just a couple of $100s. So super excited about this. It's combined with FHA and USDA only. Pros and cons to that, right? The pros is it allows for a lower credit score. It allows for a higher debt to income ratio, things like that. The cons is no condos with this loan unless they're FHA approved. And as you know, there's not a lot of condos that are FHA approved in this area. 620 credit score for the forgivable one and 660 credit score for the repayable one. So again, it's a minimum credit score of 620 for you to be able to qualify. We have other programs, down payment assistance programs, that allow for a 600 credit score. The truth is, having a 620 credit score will open a lot more opportunities. So 620 credit score to get a 5% down payment assistance on an FHA loan. Max ratios are per AUS. What does that mean? What that means is you are able to qualify for more with this down payment assistance than with most of the other down payment assistance programs, because other down payment assistance programs like the Hometown Hero have a cap of the max that you can have in debt to income ratio. It's 50%. For this loan, we can go up to 56 or 55%. So you may be in a position where the Hometown Hero only qualifies you for like 350, let's say, but this one will allow you to qualify up to 400,000. So super important. It's good to have options even when somebody is using a down payment assistance program. And the other thing is, this works for single family homes, condos, as long as they're approved, and even duplexes. So if somebody's going to move into the one side of the duplex and rent the other side that's still considered primary residence, they can move into that, use this down payment assistance to get in with 0% down payment, and basically acquire not only their house, but an investment property immediately with 0% down. This is amazing, guys. A couple things that I don't have on the slides, I don't believe. Okay, no income limit. So again, the Hometown Hero has income limit. This one has no income limits. A couple things that I don't have on the slides that's super important to understand too, or to know, is there's no prepayment penalty on something like this. So as soon as the rates go down, we can do a refinance and wipe out this loan, even both loans, without any penalty. And if somebody wants to sell the house, I don't know, a year later, 7 months later, whatever, they can still sell the house because there's no prepayment penalty. And a lot of my clients have used this program, and then after a year, they turn that property into an investment property and they move on and use another loan with a minimum down payment to buy their next house. So that is down payment assistance program. Anybody that says, oh, I can't buy a house because I don't have the funds, guys, if you combine this with seller concessions, which are more and more, which are happening more and more in this market, this is definitely an option for those clients. Okay. All right. No taxes. So think of your 1099 workers, think of your self-employed people that haven't done their taxes or did their taxes, and they declare a lot of money, but they also declare a lot of deductions. So really, they declare that they lost money or they don't have a lot of money. Think of those people. Or think of people that make money with tips and commissions, because they don't just have to be self-employed, but think of people that make good money, but they don't declare the money that they make. Well, we have a bank statement loan, a 1099 loan, and a profit and loss loan for those people. The way that these ones work is simple. We can give them a loan from $150,000 all the way to $4 million. We can look at 12 months or 24 months bank statements to do an average. Obviously, we'll try to pick the higher average, and we can look at personal bank statements or even business bank statements. So again, if you think about it, somebody that's not self-employed, they won't have a business bank statement. Gig workers or people that work for tips and things like that. Well, we can use their personal bank statements to qualify them and to look at their income. We need 2 years seasoning for foreclosure, short sale, and bankruptcy, meaning if they had a foreclosure, a short sale, and bankruptcy, we need to wait 2 years since that happened. The borrowers can own as little as 50% of the business for the business bank statement, or 25% of the business if we're using a personal bank statement if they're self-employed. This works for all occupancies, meaning this is not just for people that are going to live in the property. This also works for vacation homes and investment properties. We also have a 40-year interest only available. The way that this one works is 10 years of interest only and then 30 years as a normal loan. And these ones, as long as they have a good credit, we're talking about a 740 credit score, we can do a minimum of a 10% down payment. If they don't have a good credit, then they need to put 20%, but they can go, their credit can be as low as 640. And then, we have an option where we only look at the first page of the bank statement as opposed to having to review all of the bank statements. Again, guys, a lot of people make good money, but they don't necessarily declare it in their taxes. Rather than telling them that they need to wait 2 years to show that money, let's at least give them the option to, be able to buy right away. And I'll tell you, the real is what ends up happening with my clients is they come to me and they tell me, hey, Ed, I want to buy a house, and they're self-employed or they qualify for something like this. And what I tell them, especially before tax season, is I tell them, okay, if you want to buy a house, well, we don't qualify right now because this is your income on your taxes, but we will qualify for this program. And we show them the option of this program. Or we say, or your income of your taxes need to be more similar to what you actually make on your bank statements. And they make a decision, but giving them the option, it's super powerful for those clients. Okay. Oh, and no self-employment requisite. We already talked about that. Okay. Another one with no income, still no problem. Let's say that we have somebody that, they don't necessarily show any money in their tax returns or even in their bank statements, and they want to buy an investment property. Well, this is a popular loan nowadays. It's called the DSCR loan. And the way it works is we look at the cash flow of the property. If they buy a property and the property is going to pay for itself, okay? If the property is going to, the potential rental of the property is going to cover the mortgage, they are able to qualify for that investment property. We don't look at the income per se, we just look at the actual property. One cool thing about this loan is you can close in the name of an LLC. Now, if for whatever reason you don't, the potential rent, it doesn't cover it, that's okay. As long as you put a little bit more of a down payment, 30% down, you will qualify even if the potential rent of the property doesn't cover the full mortgage payment. Look, one thing about this loan is the house doesn't have to be rented at the time of the person purchasing this property, because what we do is when we send an appraiser to the property, that appraisal is also going to look at the potential rental income of that property, and that's what we're going to base our numbers on. So very, very interesting loan, especially for those investors. We can do this with a credit score down to 660. The minimum down payment is going to be 15%. With all of these loans, the higher the credit score and the higher the down payment, the lower the rates are going to be. But the minimum rate is going to be, the minimum credit is going to be, not the credit. The minimum down payment is going to be 15%. You can actually buy the house in the name of an LLC or a corporation. It doesn't have to be just in the name of a single person, like those conventional loans and FHA, where you can only take them in the name of a person or a trust. Not one person, but just people. Like it has to be a natural person or 4 natural people or a trust. It cannot be in the name of an LLC or a corporation. This loan allows you to do that, which is super important for a lot of investors. We can do loan amounts up to $2 million. We can go over the $2 million, but it would require 2 appraisals at that point. And the minimum loan amount on this one is $75,000. There's no borrower income or employment information required on this. So again, we're not even going to ask what they do for a living. We're not even going to put that in the application. Again, there's interest only options if we want to maximize that cash flow. So again, if maybe we're a little short on the cash flow on that potential rental income, then we can go with the interest only option. And then there's no limit to the total number of properties that somebody has financing. This is important because on a conventional loan, a lot of times you're maxed at 10 properties. For this one, if you have somebody that really wants to acquire a lot of properties, we can not only help them acquire more properties because they're not going to tie in all of their cash into these purchases, but in addition to that, we're not going to limit them at the 10% at the 10 properties max. Non-warranted condos are allowed, and for that matter, all properties are allowed, even manufactured homes in this case, and condotels are allowed as well. So this is a great, great, great investment option for people that are looking for an investment property that don't necessarily want to show tax return and all those things. Okay. Now, that takes care of people that don't want to show anything, not even the bank statements for an investment property. Well, what about if they want to live in the property? Well, we have a no-income loan for primary residences. So a no-income loan for a property where they're going to live in. And think about this, guys. A lot of times people have the income, but they just can't show the income, right? Somebody that's new to the state of Florida and, they had a completely different business up north and now they're reestablishing their business here. Well, those people in the eyes of mortgages, they don't make any money because their income we can't really use. Somebody that has a brand new job on a brand new career in a brand new place, those people we can't. A lot of retirees, people that made a lot of money, but now they're only living off of their Social Security, and that's not enough income, let's say, to qualify them. Or people that got an inheritance, or people that are starting a new business. A lot of times also people that sold a house up north, and then they're coming here with a lot of cash, but they don't want to spend all their cash into they don't want to spend all their cash to buy one property. So what they can do is we have a loan for them. We don't need to look at any income or employment or anything like that. Income documentation, like I say, it's not required. We're not going to look at W-2s, pay stubs. Like I said, we're not even going to add the income information or the employment information into this. We need to make sure that they have the money that they're going to use for this for at least 30 days. Okay, so the money needs to be in the bank for at least 30 days. We can do loans amount up to $3 million with just one appraisal. Over $2 million, over $3 million is going to require two appraisals. And then there's a minimum 25% down payment. Again, somebody that sold their house up north, let's say, or recently retired, if they can put 25% down on a house, we don't need to show them. Don't need to show any income or anything like that. We're not gonna ask for W-2s, pay stubs, their place of employment, or anything. As long as they can put the 25% down, 35% if it's a cash out refinance. So if they want to pull money out of their equity, the minimum credit score is gonna be 680. And they need to have the money that they're going to use in their account for at least 30 days. Okay. Now, the money that they're going to use in their account for at least 30 days, if there's deposits in that account during those 30 days, we need to season it, but we're not going to season deposits that are below 10% of the loan amount. Okay, so if they deposit some money, as long as it's below 10% of the loan amount, we don't really need to track where that money came from. The other thing that I want to mention on this loan that we don't have here is that the client needs to have some reserves, meaning they're putting 25% down, they have the 680 credit score, the money's been there for 30 days, but after the closing, we need to see that they have at least 18 to 24 months of that payment. Now, that money, we're not going to revisit again. We're not going to see that money is there every day after the closing. This is just, we need to make sure that there's some money left over in the client's accounts. That money can be retirement account. That money can be anything as long as they have access to that money in the form of liquid funds. This is important, guys. A lot of people, a lot of my clients that end up using this are clients that have the money, but they don't want to pull money out of their retirement just yet because of tax purposes. So what they do is they go ahead, they pay the 25% down, they use all their retirement money that they have for the reserves, and they're good. We don't freeze that money or anything like that. All we need to do is make sure that that money is there before the closing, and that's it. It's not frozen. It's not something that we're going to check after closing or anything like that. This is a true no income loan for people that are living in the property with just 25% down payment. Guys, this is a loan that has saved a lot of my clients that otherwise wouldn't qualify, that qualify for this. A lot of people in tough situations, a lot of people in new situations where they're new to the state, new to their job, newly divorced or newly self-employed, apply for this loan and qualify. This is a great loan that you should have in your back pocket. Okay, foreign nationals. All my people that are coming from all these other countries to buy here in America. Okay, it's very simple. We do minimum loans amounts down to $75,000, maximums to 2.5 million. Although again, that's just with one appraisal. We can do with two appraisals a little higher than that. We do a DSCR format for this, but they need to make sure that the property pays for itself. So the way it works is if somebody's foreign national, they need to make sure that the property that they're buying can pay for itself with the potential rent. So all we're going to do as far as income verification is we're going to make sure that the potential rental of the property can pay for the actual mortgage. And other than that, we're good. We don't need any income information or documentation on those clients. The assets needs to be sourced for 60 days, and they need to be in an American bank account for 30 days. Guys, believe it or not, this is the hardest thing to do in this loan. The hardest thing for these loans is to make sure that the money that they're going to use, it's here in America for at least 30 days in a US bank account, and that we can source the money for 60 days. Meaning, I'm from Colombia, so let's use Colombia as an example. We need to show that that money was in a bank in Colombia for at least 30 days, and then that it came to America, and then it's been in America for at least 30 days, and then we can use it. So my suggestion, and honestly, this is my suggestion with all of this, let us talk to these clients before they even get under contract, because it's a lot easier to plan ahead. It's a lot easier to make sure that the money's here, and as long as the money's here, we are basically good to go. The rest is just make sure that we pick a property that can rent themselves for more than the actual payment. On this one, we do require a 6 to 12 month reserves required, meaning that we need to make sure that they're going to have enough money left over somewhere, even in their own country, even in Colombia, in the example I'm giving, to make payments for at least 6 to 12 months. They can close in the name of an LLC. That's absolutely okay. And they need to have the auto pay set up. What we need to show is that they at least are able to legally come into the country. Doesn't need to be necessarily a visa if it's from a country that they don't require a visa. But if it's a country that requires a visa, we just need to show that they have a visa, even if it's just a tourist visa. And with that tourist visa, they will be able to qualify for something like this. The minimum down payment is 30%, and there's no credit required. So we're not going to look at credit. We're not going to pull credit or anything like that. So as long as they have 30% down, the money's been here for at least 30 days, and we can see where the money was 30 days prior to that, and the property pays for itself, we're good to go for all those people that are in other countries trying to move or trying to buy a house here in America. Okay, ITIN loans. We do ITIN loans too. I get a lot of questions about that. We can do them down up to 2.5 million with a minimum of $125,000. We require 1 year seasoning for any foreclosure, short sales, anything like that. 2 year seasoning for bankruptcy. We can purchase, do cash out, or rate and term refinance. That's fine. This only works for primary properties, for properties that they're going to live in, and only one unit. This is not going to work for duplexes, triplexes, or fourplexes. Non-warrantable condos are allowed, so it works for condos and non-warrantable condos. The maximum debt to income ratio is going to be 50%, just like with a conventional loan. And we do require a credit score of 640. We will pull their credit with their ITIN. So when we put the RTIN, that's going to give us a credit score. We need to have at least a minimum of a 640 credit score to qualify them. We require a minimum down payment of 25% down. And that's it. That's the ITIN loans. Okay. We do have other loans out there that I think is worth mentioning. Okay. We have things like cross collateralization. It's a hard word, which means somebody that wants to use the funds or use the equity from other properties that they have in order to buy one property. We can do that. We also do asset depletion. Let's talk about somebody that has a lot of money in the bank and we want to turn that into income, right? There's a chart that we can use and we can turn money that they have in the bank into income to qualify them. And then we also have doctor loans. A lot of doctors out there, they don't qualify for the hometown hero because they make too much money. Well, we have a 0% down payment with no mortgage insurance doctor loan. So all of the medical professionals out there, we can do a no income, again, like I said, no down payment, sorry, and a no mortgage insurance loan. And a lot of doctors have issues qualifying for a house, especially at the beginning, because some contracts are 1099 contracts, and typically normal financing requires you to have 2 years. Well, this program doesn't require them to have 2 years. We can just use the contract, even if it's the 1099 contract, for them to qualify. So it's very powerful. And then we have bridge loans. And look, the bridge loans are a lot more popular nowadays from a lot of people that are selling their house and then buying a house. And we basically have 3 programs on this. And this is how it works. And pay attention because I don't have the slides on this one. One problem of somebody that's selling a house and buying a house at the same time is that they don't qualify because of their debt to income ratio. Well, we have a program that allows us to basically ignore that debt that they have on their departing residence, on the residence that they're selling. We can ignore it, and then we can use a conventional loan to buy the next house. We have a program like that. That's one. The other issue that a lot of people have is the down payment. Well, the down payment is tied into the equity of the house, and they want to buy this other house, but they don't have the money to buy it. Well, we have a program where we can take a short-term loan. We can take a loan until the house sell on the house that they're leaving. We don't have payments on that loan, so we don't have to really hit them with any payments, and they can use that loan in order to buy their next house. They can go up to a 90% loan to value on that house that they're selling. So again, let's say that the house is selling for $100,000 and that's the value of the house. They can take up to $90,000 on the house that they're selling to buy this new house. And then we have another program for people that they just want to pay cash and they're selling a house and they're buying the next house with the proceeds of the sale of the house. And they're not interested in taking a loan per se. All they want to do is sell this property and take 100% of those proceeds or 50% or whatever, and then buy this next house cash. Well, we have a short-term loan for that too, where we basically help them buy the house. We buy the house for them cash for a short term, right? They have 120 days to sell that property and then just pay it off. So there's a lot of different options right now that we didn't have before that we've had to create for these particular situations. So, I know that when somebody says, I want to pay cash, you guys don't necessarily think of us as lenders. Well, we have solutions for those clients that are trying to sell and buy at the same time, even though they're going to buy cash with the proceeds of their sale. We have loans for them. Okay. We also have loans for owner builders, for people that are trying to build a house for them to live in. And we also have builder loans. So if you work with any builder that needs financing, or they're building 1 or 2 or 3 houses at a time because it's been harder lately for them to get financing, well, we have an option where they can finance a bunch of properties at the same time, as long as they have a little bit of experience. Same thing, if you have investors that are interested in coming here and building a bunch of houses. As long as they partner with a builder that has some experience, we can finance them for them to build and then sell. Okay. And then before we're done, I think it's worth talking about the hometown heroes, because you're going to hear about the hometown heroes a lot again. It's a great program, and because it's going to be up again now on July 1st, I think it's worth going over the hometown heroes just very, very quick. We'll probably do another class just on the hometown heroes, but I just want to give you the highlights in case you have somebody asking about the hometown heroes. Honestly, what you should do is tell them to talk to me, because even if they don't qualify for that program, we have other down payment assistance programs, but I want you to have a little bit of knowledge, at least, to be dangerous. Okay. So hometown hero. First thing is a first-time home buyer loan, okay? And you have to live in the property. This is not an investment property. This is not a vacation home, and it's technically a first-time home buyer loan. I say technically because the way that they define first-time home buyer is a little bit different. It's somebody that hasn't lived in their house for the last 3 years. So they can have an investment property, they can have a rental property, but as long as they haven't lived in the house for the last 3 years, they're considered first-time home buyers. Okay, again, this is the old hometown hero versus the new hometown hero. I think it's worth mentioning. Okay, it's available only in Florida. So, I think this works because I think everybody here is in Florida. It works with FHA, VA, USDA, and conventional loans, meaning it works for conventional loans too, which makes it a lot easier to buy a condo with these loans. It is a repayable loan at a 5% down payment with a 0% interest. It's important. You have to repay this loan, but it has 0% interest, meaning if you get $20,000 in down payment assistance, you're only going to pay $20,000 forever because there's no interest on the loan, but you have to repay it. Okay. This is just the funding that they did last time. Who knows how much money they're going to put in. The maximum loan down payment assistance that they're going to give you is $35,000. And the minimum is $10,000. So again, it's 5% up to $35,000. But if you find the only $150,000 property in Collier and Lee County, well, they'll still give you $10,000 instead of just 5% of $150,000. Okay. This is an example. If somebody has a house for $726,000, the loan amount on a normal house like this with a 5% down payment would be $704,222. Well, the Heroes program is going to give you $35,000 for this as a down payment. So I'm sorry, with 3% down, it's not 5%. With 3% down payment, if you're a first-time home buyer, you can get a 3% down payment conventional loan. So if the Hero programs give you $35,000 for this, you can use part of that $35,000. You can use $21,780 for the down payment, and then you still have $13,220 for the closing costs. And again, just like our other down payment assistance program, as a realtor, you can still negotiate seller concessions. So technically, $13,000 should cover everything, if not, most of those closing costs. But let's say that this is a house that has a high flood insurance and a lot of things that make those closing costs higher. You can still negotiate for the seller to help with seller concessions and make it so your client has to bring zero to the table. Powerful loan program, especially with that 0% down payment help. Okay, repayable. When is it repayable? It's repayable when you sell the property. It's repayable when you vacate it as a primary residence. So when you go, okay, I want to rent out this property, I want to buy another house, you have to repay not the whole loan, you have to repay the 5% portion of the loan. When you transfer the deed, which is basically when you sell the property, and then when you refinance. Again, that's when you have to repay that 5% portion of the loan. Okay, who qualifies? Before, there was only, same primary residence only, not somebody that's not going to move in the house. Okay, that's not going to move into the house. You have to occupy the property within 60 days. So if you buy the property, it's not something like, well, that's going to be my primary residence eventually. Eventually needs to be within 60 days of closing. Okay, this is first-time home buyer, but remember, people that haven't owned and live in the house for the last 3 years, the minimum is a 640 credit score, and There's no occupation requirements, so we're all heroes now. It's not just for nurses and firefighters and things like that. They must be full-time employees or work full-time, even if they're self-employed, but work full-time. Full-time, it's considered 35 hours a week. And they're very stern about that. 34 wouldn't work. It has to be 35 hours a week. We need to document that they work at least 35 hours a week. And the buyers must work for an employer that has a Florida-based company. So if they work for Starbucks, for example, the headquarters don't have to be in Florida, but they need to have at least locations in Florida. If they're self-employed, their LLC or their license or something needs to be here in Florida, and we need to be able to show that. Super important, guys. If somebody works remote and there's no locations here in Florida, they will not qualify for this program. We need to keep that in mind. Okay, the limits, I put Collier, Lee, and Charlotte County's limits as far as income limits, the FHA limits, and the loan limits for conventional and VA loans. Take a picture of that. Oh, take a picture of that. Okay, key factors. Reduce mortgage insurance. That's great. So if they make less than 80% of the area median income, they're actually going to get a lower mortgage insurance. First-time home buyer requirement is waived for veterans and active duty. Super important too. Applicants can only own one non-primary property per loan, meaning that's fine. If I have a property already that I haven't lived in the past 3 years, it's a rental property, that's okay. But if I have 2 of those, then it's not okay, only 1 per loan. We say per loan, not per person, because if there's 2 people in the loan, only 1 person can have that other property, not both, okay? First-time home buyer course is required. It's just the way it is. They need to take the class they can take online. It's quick and it's easy, and honestly, it's not a bad thing to do. The max debt to income on this one, it's 50% for all loans except for manufactured homes. Then will be 45%. That's why I was saying at the beginning, it may be a possibility that somebody qualifies for less if they use this loan than if they use other loans. So make sure that you keep that in mind so that you understand when we give them options, this is the reason why. Co-signers are allowed. Prepayment on the DPA is allowed, so they can pay off that other loan whenever they want. And all borrowers can only have one Florida home buyer loan. We already talked about that. Basically, the idea is, we don't want somebody to have multiple hometown heroes loans. They need to leave it for everybody. The types of property that are allowed for this: single family home, 2 to 4 unit property, condominiums, and manufactured homes. So they're actually pretty flexible with the type of properties that you can buy with this. And that's it, guys. So listen, the point of this is not for you guys to become mortgage experts. And I know that we went a little bit more specific and deeper in the guidelines that we normally get. The point of this is, I don't want you guys losing money, and most importantly, not helping somebody get into a house that actually has the ability to get into a house just because you didn't even know that these tools existed. So make sure that you don't leave any of your buyers behind. A lot of these people are extremely well qualified. A lot of people have tried. They haven't been able to get into a house, and they just get discouraged. They don't get into a house because they can't find the right program. Chances are we have the right program for them. We can put them in a path for home ownership. I invite you to please set up an appointment with me. This is my email. This is my phone number. If you have anybody that you want us to talk to, shoot us a text or shoot me a text or email me. And I would love to have the opportunity to work with you and to turn those people that maybe haven't been able to buy a house into buyers. Okay, so it's 10:49. We have 11 minutes. I'm gonna stay on for another 5 minutes and see if we have any questions, and we can answer that. Okay, so we have one question about co-ops. Co-ops, unfortunately, would not be eligible for the majority of these loans, if not all. If it's a manufactured home, they have to own the land. We have a loan that allows you to just buy basically to land on the manufactured home without owning the land, but it's not a loan that we have here. the person that had that question, I think it's yeah, Rob, just shoot me an email or a text, and then I can send you a little bit more info on those loans. Do you have a loan for someone that is assuming the seller's loan, but buyer doesn't have the cash to make up the equity to cover the full price of the property? Yes. So we can do a purchase home equity line of credit, is what those will be called. So yes, so if somebody's assuming, for those of you who don't know, government loans are assumable. So if somebody's assuming a VA loan, they don't have to be a VA, by the way, or an FHA loan because they want to take advantage of that lower interest rates, what we can do is we can do basically supplement or complement that purchase with a home equity line of credit that we're able to do on the purchase to bridge that gap. So yes, we can do that. Windy, we can do that. Okay. Any other questions? Okay, I see a couple that are asking if I'm sending the slides to this presentation. So this is how it works. And I'm gonna be completely honest with you guys. If you want the slides, you have to set up a meeting with me. I'm happy to send you the slides, but I'm not going to send the slides to somebody that has never sat through one of my realtor presentation. If you sat through my realtor presentation, shoot me an email if you want the slides. I'm sending you the slides. If you haven't really heard what we can do for you for a realtor perspective and for your clients, you have to set up, get that QR code, set up a 30-minute consultation with me. And I promise you that after that, not only you're going to get these slides, but you're going to get all the slides from every class and everything we do after that. But first, you have to sit with me. Sorry. Yes, I did, Amy. We're going to start working on that. All right, guys. So if there's no more questions, please send me an email if you don't want to put the questions out there, or send me a text message. That's my cell phone, by the way, that goes directly to me. And let's get this going. Guys, stop saying no to clients that want to buy a house and can actually qualify for a house. The loans are not harder. Okay. I promise you it's not hard, especially for you. It's not going to be any harder. It's the same thing you already do, probably less because it's less documentation. So let's do it, guys. All right. Take care. Have a great Thursday. Have a great weekend. Also, we send a weekly email with a lot of information, and the weekly email doesn't have information. It has things that we're sending to our clients and things for you to swipe and adapt to, literally copy and paste. So if you're not getting the weekly email, shoot me an email too, and I'll put you in that list so that you can get those emails. The one that we sent 2 months ago or last month was about all the tax deductible items for 2024 and 2023 purchases. We talk about, how to do a 1031 exchange. We talk about how to do things like avoiding paying capital gains and things like that. So make sure you do that. And then we also have content days coming up in this month. We have actually 3 content days coming up. So make sure that you sign up. And with that, my friends, text me or email me if you have any questions. I hope you enjoy your time here.